Welcome back. I'm Pratap here. Today is 6th May 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, all of you please note we are providing complete free training on supply demand zone price action. And all the training lessons are available at our NeoStock YouTube channel. To access all the supply demand zone price action course videos, you at our channel homepage, click on the tab posts. Some of you might be seeing community tab. In that case, click on the tab. Then you get access to this post. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. Here you have all the training lessons are available. Just scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to my training instructions provided at our Telegram channel. You can access our Telegram channel link in this video description. Once you join at our Telegram channel, at the top of the window, you can find pinned messages. Go to the pinned messages. One of the messages are having all the training instructions. So please learn this course and be a very good independent trader in the coming months time period. Okay, now let's get into our performance evaluation of the high liquidity zones. So previous end of the day report, our software identified 11 high liquidity zones from daily and 75 minutes time frame. Out of these 11, today we got trades from 5 stocks. 7 trades we got. And 3 are successful and the remaining 4 from 2 stocks. They are stopped out, that we will discuss. The first one is Wipro. And we already analyzed Wipro in the previous session. But yesterday Wipro gave a dynamic entry zone. Trade it gave actually yesterday. But somehow in my analysis I missed it. Otherwise today we would have got one more successful trade from Wipro. So that's my mistake. What is the mistake I did, I will explain today. But today we also gave one more trade. That also we will discuss. Previously we learned our software identified this as a leg in failed ERC, 4 base candles and a drop candle. These 2 are medium size candles but part of the base because there are earlier base candles. Okay, this 75 minutes always already we fine tuned that we discussed in the previous video. Please look into that. But what we missed in yesterday analysis, let me show you. Let's go to the 15 minutes time frame. Yesterday 2 dynamic zones are created yesterday. One is a drop, 2 base candles and a drop candle, the 15-minute zone here. And also one more rally, 3 base candles and a drop candle. So we have to fine-tune 5-minute zones. Actually yesterday these 2 are dynamic zones. What is dynamic zones? The fine-tuned zones that create during the live market. So yesterday's live market, these 2 zones are created. So live market, when you analyze the charts, you will identify the trade opportunities. Yesterday we got 1:3 RR trade Wipro gave us. How? If you go to 5 minutes time frame, let's check here. We have a rally base drop and follow through candle, the fine tuned 5-minute zone. See, yesterday it gave a trade. At 12:50 it gave the trade. When this zone was created yesterday, at 11:35 this zone was created. After that prices gave an entry and finally reached 1:3 RR somewhere here in this candle. And if you observe carefully, this zone is testing this zone multiple times. Maybe this could be a high liquidity zone. If that is the case, today also we can plan a trade. But today it is stopped out. Stopped out means violated. That to happen in morning 9:15 1-minute candle. Before I show how this zone is completely gone at 9:15 1-minute candle, here also we need to fine tune. See, here you have rally base drop. This is not very clear because this is also a large candle. But what you can do, you can draw a rally to base candles and drop candle here, but the structure is not really convincing structure here. That's why what I did, I went to 3 minutes time frame. There I saw LOTL zones. See here you have a rally base drop and follow through candle, and again rally base drop is created, LOTL zone. That means this zone might be having a strong institutional order flow. So this is the area you should plan if this is violated. This is the trade plan. And what about the target? Target, we have a 15-minute zone is available. We have a rally base and a rally candle. This 15-minute zone is the target. Okay, today what happened? Today, this morning, this zone, the one we are planning a high liquidity trade in this area, is violated in the morning 1 minute candle itself, 9:15, 1 minute candle. So anyway, you don't take trades in the morning 9:15. See, market opened above this zone. See the gap up. This is one of the reasons why we don't take trades in morning 9:15 candle. One is volatility is very high. Second thing, market may open with gap up and gap downs, and that gives a huge stop loss for us. Okay, anyway, this is gone. Just I want to show you how this is violated on 9:15, and also I want to show you how we missed yesterday. I mean, in my analysis, how I missed identifying this trade yesterday. Actually, high liquidity zone's performance point of view, it worked, but somehow in my analysis, the dynamic zone creation, I ignored it. Okay, anyway, this could have been a trade for us yesterday's point of view. Now I am deleting. Now our concentration is on this zone, fine-tuned zone. And we got a trade when today morning 9:17 candle. Price is centered, a little inside they went. Definitely your trade would have been executed. After that, price sharply came down, and finally at 9:53 candle it reached the target. (15 minutes) target. But I'm sure many of you would have exited our trade. Let me draw a horizontal line. You might have exited our trade here. Why? Because there is a gap. Pro gap is for 5-minute zones point of view. If you think anything here, some pro gap area is there. Many times what happens, prices get into the gap and again it will be moving up. So because of these reasons, maybe this zone may violate. This is one of the reasons why previously we discussed gap areas, we may book the profit. If that is the case, today you got the trade at 9:17 candle and you would have exited our trade at 9:21 candle. In 4 minutes, you would have closed our trade. You would have got a good profit. But anyway, it reached the 15 minutes target. I calculated the performance up to this. See, practicality is different, performance evaluation is different. Performance evaluation is about how better our software is giving profits till the 15-minute zone. Has it been reached or not? If not, till the gap area, has it been reached or not? If not, at least 1:3 RR it has given or not. This is how we evaluate the performance calculations. But in reality, you have different trade plans. Those who don't want to take any risk at all, probably they will exit at 1:3 RR. Those who take some more risk and want to get more profit, probably these gap areas they book the profit. Those who wants to take high risk, probably they will wait until the zones will be reaching the 15 minutes target. If not, they will be using a trailing stop after reaching 1:3 RR and they book the profits. This is how experienced people will do with the help of trailing stop loss. But whatever it is, performance point of view, today it reached the 15 minutes target. So that's why performance statistics I am calculating from here to here. You are aware of this, but why again and again I am telling, because you should not get confusion. I have seen some people always aiming for 15 minutes target without having any experience. Some of you are learning the concepts now. When you are learning the concepts, I am strongly recommending you first 3 months to 6 months, you use only 1:3 trades. Once you get better confidence, experience, once you get some good money, then you start implementing like till 15 minutes target zone or till the gap area. Of course, always 1:3 RR should be there from here to here. Otherwise, you can't take the trades. Okay. So this is the way Wipro today has given a profit, 7,980 rupees profit, which is 5.8% ROI. And today we got one more dynamic fine-tuned 15-minute zone is created. Yesterday I missed Wipro in my analysis, but today I did not miss. Let us look into Balakrishna Industries. Balakrishna Industries is a 75 minutes high liquidity supply zone. Let me go to 75 minutes time frame. How our software identified this zone? As a rally candle, 1, 2, 3, 4 base candles and a drop candle. This is how our software identified this zone. Okay, this one we need to fine tune with 15 minutes time frame. So go to 15 minutes time frame and let's verify where is 15 minutes zone. See here you have a 15-minute zone, rally, base, drop. Again prices went, moved up. Again rally, 2 base candles and a drop candle it is created. LOTL zones. Okay, now let's fine tune this zone with the 5 minutes time frame. Let's go to the 5 minutes. Here in the 5 minutes time frame, you have a fresh zone. You have a rally, base, drop, but this can be considered as a next candle, a rejection from this zone, and short move down. But this zone is already tested yesterday. Of course, our software did not identify this zone yesterday. Otherwise, yesterday we would have got a good trade from this zone. Because it is a tested zone, we didn't plan a trade from that zone. Because once a zone is not having a fresh fine-tuned 5-minute zone, there are higher chances zone will be violated, right? See what happened yesterday. Yesterday prices entered into this zone at 13 hours. See how sharply prices again came down. So this zone is anyway tested. There are higher chances today it will be violated. That is what happened. Today morning it is pierced, came down and after that completely violated. But now here at 15 minutes time frame, a new dynamic zone is created. What is dynamic zone? The zone that creates, the fine-tuned zone that is creating during the live market. So today's live market, this zone is created. But before today market starts, we analyze the chart. When we analyze the chart, the chart will be like this. Something like this chart will be, because this is yesterday's closing. So you won't be having any other zones. Once market is started, now you have to analyze this chart also. While analysis in the live market, you might have identified a rally base drop 15 minutes zone. Let me go to 15 minutes time frame. So first of all, this zone we didn't plan a trade because it is already tested, not anymore a fresh zone. And after that today it is pierced and somewhat came down, and after that completely it is violated. Anyway, we didn't plan any trades from this zone because it is a tested zone and we know it is not a high liquidity. There are higher chances it will be violated. And today morning what happened? Today morning at 11 o'clock, this 15-minute zone is created inside the 75-minute zone. Rally, base, drop and excellent follow-through candle. And this is having a fine-tuned zone. Go to the 5 minutes time frame. We have a fine-tuned zone. We have a drop candle. You have 1, 2, 3 base candles and a drop candle. I'm supposed to draw a zone like this, right? Of course, we got the trade. But what I did, I did risk management. To minimize the risk, what I did, I went to 3 minutes time frame because we have a 5-minute structure. When 5-minute structure is there, when clarity is missing or risk is high, at the time you can go to 3 minutes. Suppose without 5-minute structure, assume there is a rally, no base candles and a drop candle at 5 minutes. At the time you should not look for a 3-minute zone. That is very wrong. Many times those zones will be violated. Maybe once in a while they work. By seeing that, you should not get an impression. Without 5 minutes, 3 minutes will work. 5 minutes should be there. some clarity is missing or risk is high, at that time only you should look for 3 minutes. That's why always I say 3-minute zone is only, excuse me, a 3-minute zone is only a supplement to the, excuse me, 3-minute zone is only a supplement to the 5-minute zone, but not the complete replacement. Anyway, we have a clear structure here. Even if you are not convinced this is a leg-in, even if you want to consider this as a base, then you have rally 1, 2, 3, 4, 5 base candles, because the risk is high. Risk management activity you have to do. That is what I did. I went to 3 minutes time frame. 3 minutes I consider this as a failed ERC, as a rally candle. You have 2 base candles and a drop candle. That way this zone I have drawn on 3 minutes time frame. See, rally, 2 base candles and drop. So this is the area we want to plan the trade. Today prices entered into that area. When prices entered at 12:51 candle, just before 1 o'clock. After that prices were moving sometime here. After that they didn't reach the 15 minutes target. Here we have somewhere here we have 15 minutes target. See here, we have dropped 2 base candles and a rally candle. This is our actual 15 minutes target. Then what is this target? This is a 5 minutes target. Why I stick it to the 5 minutes target? Because by the time prices reaches, see the time, it is 2 o'clock 20 minutes, almost closing hour of the market. Maybe at 2:30 or 2:45, your brokers will automatically close the trade if you take it in cash segment. Of course, F&O you can hold till the last minute. So that's why this is a drop base rally. This is, I have freezed this area should be the target, because from here to here already it gave good profit. So that way this is the ideal area. Even if you don't book, suppose you are in the F&O category, see, the rest of the day prices hold it in this area only. Of course, the last 5 minutes closing hours, just it is violated. But till that time, see, prices stayed here only. So definitely in this area somewhere you have to book the profit. There is no other option, because market is nearing to the closing hour. Because HLQ zone trade should be closed during intraday itself. You can hold, but you can't expect a good success rate. If it worked, you are lucky. If it is violated, unnecessarily you will be losing this profit, right? Okay, how much profit Balakrishna is given? This is a dynamic fine-tuned zone trade. You already learned dynamic fine-tuned zones in lesson 21. Maybe lesson 21, 7th lesson or 8th part of the video you might have learned. If anybody remember the dynamic fine-tuned zone lesson number, please put in the comment section. It might be helpful to the other members also. The Balakrishna Industries has given you 5,850 rupees profit, which is 3.7% ROI as per one futures margin cost. You know, all profits we always calculate based on one margin, futures margin cost point of view. Okay, this is about Balakrishna Industries. And one more very excellent trade we got, CAMS, Computer Age Management Services. This is a daily zone, demand zone. This is the candle as a, this is the leg-in. You have 3 base candles and with hidden body a rally candle. If you add the hidden body, it is a rally candle. So it's a hidden zone. Our software identified this zone as a high liquidity zone. And this daily zone is fine-tuned with 75 minutes time frame. Go to 75 minutes time frame. See here you have a rally candle, 2 base candles and a rally, and with hidden body follow through candles. And here it looks like a rally, 2 base candles, but see, this is a candle completely a drop closed inside the zone. So this is not a leg out candle. After that there is one more rally. You have a drop candle, rally candle, in between no base candles. So here you can't draw any zone. This area probably will be violated. Today price closed here, maybe tomorrow easily it will violate, but below we have a lower time frame horizon is there, that we may get a trade opportunity, what I mean to say. So this is the only one valid 75 minutes zone. Rally, base, rally, follow through candle. Let's go to the 15 minutes time frame. So in this area, the 15 minutes area, see we have a rally candle. You have 1, 2, 3, 4, 5 base candles and a rally candle. Rally, base, rally. This is the 15 minute zone. So inside the 15 minute zone, let's go to the 5 minutes time frame. So here we have a rally candle, 1, 2, 3, 4 base candles, and imbalance started from this rally and follow through candles. So that's why a type 2 proximal level I have drawn. And also there is a rejection also just before from the zone. So this is a good indication. This area definitely we can plan a trade. See today prices, actually initially today, let me go to 15 minutes time frame. See this could be rally, 1, 2, 3 base candles and drop candle. This should be our target. Of course I explained this concept earlier also, but new members please listen carefully. Now go to the 5 minutes time frame. This is supposed to be your target. And price entered into the zone at 15 minutes for 15 minute zone. After you take the trade, immediately look into 15 minute zone again. Any changes? See here, interestingly, you have a drop, base, drop. That means new 15 minute zone is created. The moment new 15 minute zone is created, whether you have minimum RR or you doesn't have RR, you have to book the profit here. There is another option. Suppose from here to here, let us assume you have only 1:2 RR. You have to book the profit. It is having only 1:1 RR. You have to book the profit. Because at the time of analysis, this should be your target. You have minimum 1:3 target is here from here to here. Of course, more than 1:3 is there. I'm just telling you, minimum 1:3 already there. That is the way you did the analysis and you took the trade. At the time of taking the trade, this candle is not completed, this leg out candle. Many times what happens, you take a trade, immediately this institutional order flow strongly pushes the prices up. The price will go up and it will not reflect, it will not be looking like a leg out candle. Many times it looks like a failed ERC candle. That candle may not be qualified as a leg out. Some failed ERC candles qualify as a leg out, but there are different scenarios. In this example, if prices goes up sharply, a long candle, but this may not be qualified as a leg out. At the time, still this target will be valid, but that is not happened here, right? You have a drop base, a drop, and the moment you took the trade, after that this candle is closed. Now it confirmed a new 15 minute zone, drop base, drop. If that is, immediately you have to revise the target. You have to delete the earlier target. And this should be the area you should book your profit. Okay, luckily today we got more than 1:3 RR is there until this 15 minute zone. But every time it may not happen. Whatever the RR, you won't look for the RR once after taking the trade. All of you please listen this point carefully. After taking the trade, any new target zones are created. At the time you don't bother about the RR. Because already you are in the trade. Now you can't do anything. The only thing you can do is the newly created target, once it reaches, just book the profit and exit. Whatever the profit it gives, just accept it. That's why always I say market is dynamic. Your target sometimes will be changing. Why people fail, those people who give the recommendations? Because of these reasons. Many people expect, I want recommendation. Tell me what is entry, what is target, what is stop loss. If you ask me like this, I would have told you this is our target. But is the target reached? No. Why? Because a new target is created in the dynamic market. So whatever the recommendation I give, I fail. People will be thinking, because they are not aware of all these concepts, people will be thinking prices will be reaching, finally it hit the stop loss. Instead of booking the profit, you might have booked the profit with loss. People who took the recommendations today, they would have got a stop loss on this stock. But people who are aware of supply demand zone concepts, excellent profit they would have booked in this newly created target. See, that is the difference between learning the subject and not learning the subject. That is the difference between finding your own entry, stop loss and target, and taking the recommendations from somebody else. That is the difference. People who don't take recommendations, they would have got a profit in this stock. People who took the recommendations, today they would have got stopped out trade. Your stop loss would have been hit in this candle. That is the beauty of learning the subject. That is the beauty of having the knowledge. That's why always I am insisting all you members, learn the subject. Be an independent trader. Don't depend on the other people. If you are independent trader, many times you get a lot of profits. If you are depending on the other people, you get less profits, you get more stopped out trades. Without having the subject, you never know where to exit. Now let me go to the 5 minutes time frame. See, you got the trade. Even let me go to 1 minute so that you get exact clarity when we got the trade. This is a 1 minute chart. So this is our revised target. When you got the trade on 10 o'clock. And when it reached the target at 10:41, in 41 minutes your trade is completed. Okay, luckily today from this zone till the revised target we have 1:3.86 RR is there, almost close to 1:4 RR is there. But sometimes you may not be having sufficient RR. You may be having only 1:2 RR. Still you have to book the profit. Because before finding this new target, you took the trade. After you took the target, new target you identified. So that's why whether RR is having or not having, there is no other choice, you have to book the profit. Maybe some of you who booked the profit at 1:3, maybe somewhere here you might have booked the profit at 1:3 RR level. Let us check where we are getting 1:3 RR. Maybe somewhere here in this candle, as I told you, in this candle you would have booked the profit. And anyway, those who are looking for 15 minutes target, anyway it achieved 15 minutes target. You got it? So that's why always remember this point. See, once you analyze and you take the trade, that is, your analysis is not completed, because always you should look for dynamic zones creation. You may get dynamic entry zones, sometimes that is what we have seen Balakrishna Industries previously. Sometimes dynamic target zones you will see. That is what you have seen in CAMS. Live market is very important. That will be helping you in finding dynamic entries and dynamic targets. All these concepts clearly explained in lesson 21. Okay, this is about CAMS. Okay, how much profit it gave you? CAMS gave you a profit 4,175 rupees, which is 3.7% ROA. You may ask, here more profit, 3.7 ROA, here less profit, still 3.7 ROA. What is the reason? You know the answer, many times I am telling. Here you have a little higher futures margin cost, that is your investment. Here you have, compared to this, you have less future margin cost, your investment is less. That's why even you got less profit compared to the previous one, but RR is same. Both stocks you got 3.7% ROA. Okay, next two stocks, Indian Hotels and Kalyan Jewellers, both two fine-tuned zones and all are long trades. They are stopped out. How? Let us look into them. First let us look into Indian, and there are two more stocks. We would have got a very good profit, but we didn't take trades today. They are not 9-15 minute candle trades. They are the trades after 9:30 or 10 o'clock. But still we didn't take. Why? That I will explain later. First let me finish these trades, stopped out trades. Indian Hotels is the first one. Stopped out. It is having two fine-tuned zones. Indian Hotels, I think I already explained how I fine-tuned in the previous videos. So that's why I'm not explaining again. But one correction will be there, that I will tell you. Especially the first trade. First trade, earlier I have drawn like this. While analyzing the chart, drop, base, rally and follow through candle. See, I have drawn up to here. Now this has been changed, slightly reduced here. See, it looks like type 3 proximal. Actually it is a 3 minutes. Instead of 5 minutes, I went to 3 minutes. That is the 3 minutes trade. See here. Consider this as a drop, base, rally. That way I consider. Of course, this also could be a base candle only. But I limited my zone to this much. The reason is, earlier at 5 minutes time frame, the type 2 proximal, whatever you are drawing, suppose up to here if you draw the zone, if you take the trade here, let me draw a blue color line. If you take a trade in this blue color line, including stop buffer is coming somewhere here. So including the stop buffer, the risk is coming 2.2%. What is the maximum accepted risk? 2%. Beyond 2%, you have two options. Reject the trade. Second option, fine tune the entry in such a way you get within the 2% risk. That is what I did. Instead of taking the blue color line, type 2 proximal, what I did, I went to 3 minutes time frame. 3 minutes zone level I have drawn. This base candle level. Now risk is, including stop buffer, the risk is up to 1.8%. That means almost close to 2%. So this is the reason, this is what risk management, what you have to do. The risk adjustment. Suppose if you feel even this risk is high, better leave this stock. Because some of you don't take risk beyond 1.2% or 1.3%. Some people don't take beyond 1%. Some people accept up to 1.5% only. It's all up to how you are preparing for your risk. 2% means, for our performance statistics, always I consider minimum 2%. But for our individual's point of view, how much risk you accept, that is all depending on you. Got it? So that's why this 3 minutes fine-tuned area level, today we got the trade. First trade is stopped out. Go to 1 minute. No support at all. See, if it is morning 9:15, 1 minute, we would not have considered. See, this is 9:15, 1 minute candle. This is 9:16. This is 9:17 candle. So zone is violated. So that way your first trade is stopped out, and Indian Hotel gave you 2,950 rupees loss you would have got, which is 1.8% ROA. Here margin cost is also a little higher. That's why you got more loss. It looks like, number wise. But ROA point of view, it is minus 1.8% ROA, within 2%. What about the second one? This is the second trade. Let's go to the 5 minutes time frame. This one already I explained previously about this trade. This is how we have drawn earlier. Drop, base, rally. At the time when I explained, this also we looked at the 3 minutes level only. This analysis we did previously itself, not today. The only change I did is the upper one. This is the one I changed it today. Earlier we drawn up to 5 minutes level, but today risk management, trade management point of view. This is trade management point of view. We made sure it is within 2% level. This one we have drawn previously itself up to risk management point of view. Previously itself I explained this. And today prices entered. See, actually price, it holded the prices for some time today, but not good enough. See, prices reached here. It holded the prices, pushed the market up, but not good enough to reach 1:3 RR. Only half of the RR only it achieved. Maybe 1:2 RR or maybe close to 1:2 RR it achieved. After that again institutions and bulls and bears, there is a fight. See, imbalance took place here. Rally base drop. And again drop base. Here also it holded within the stop buffer for some time. Again institutions added more supply. 1, 2, 3, 4, 5, 6 candles and drop. And now this zone is violated. If anybody would have taken a short trade in this zone, we would have got a lot of profit today. Why short trade here? Maybe because to break this entire order flow, maybe either this area or this rally base drop area, definitely some strong order flow might be there. It gave an entry. See here, from here again prices moved up and picked up the orders and then came down. Of course, experienced people will do such kind of analysis, but you guys, without having proper knowledge, don't do any experiments. First you stick to your fundamentals. Once you get a lot of experience, at least some 1 year or 2 year or more, at least up to, I can say minimum 2 to 3 years experience, then you can look for such kind of trade opportunities. And some of these trades comes under TCO categories. I already explained trend change, origin, high liquidity zone concept. I think in lesson 25 if I am not wrong. So based on such kind of concepts, you get a lot of profits. I don't know how many of you are still using TCO concepts. I know, I explained the concept, but I know these are all experienced people's concepts. They give a lot of money. But without having a prior experience getting into those concepts, you make a lot of mistakes and ultimately you get into losses. First, the safe trades, whatever the strategies we are using, they are the safest strategy. HLQ zone is the safest strategy. Why? Because we are not using a trend, we are not using a price direction, we are not using a curve. Identifying zones having strong order flow, only fine tuning the zones you are doing. That way you are managing your trades. So that's why it is a simple strategy, easy strategy. Only dependency is software is required. Because identifying these zones are not easy, human point of view. But anyway, this is stopped out today because it is not a successful trade, because it is not achieved 1:3 RR. So that way it is stopped out. And how much loss this second one, Indian hotel trade would have given you? 2,200 rupees, which is 1.3% negative ROA. Next, Kalyani Jewellers also same. 2 trades are stopped out, both the order flows. Let's go to Kalyani Jewellers. So this is also 75 minutes high liquidity demand zone. Our software identified yesterday as a rally 1, 2, 3 base candles and a rally candle. This is how our software identified yesterday. If you look into this zone, 15 minutes time frame, you have 2 order flows. This is the first order flow. I consider this as a leg in. 1, 2, 3, 4, 5 base candles and a rally candle. That way I have drawn this 15 minutes zone. Another 15 minutes, see here, I consider this as a failed ERC candle as a leg in, 1 base candle and a rally candle. Something like dynamic Q rally, base rally. That way I have identified this zone. This is like a drop, 5 base candles and rally. And both are fine tuned with 5 minutes time frame. See, 5-minute structure, both are not very clear. Maybe you may consider this as a drop, 2 base candles and a rally. That way we would have drawn this zone. And here again you see, you may not be convincing this is a proper zone. The reason is this candle is looking like a medium size candle. Maybe this could be a base candle, another base candle. This is medium size candle, part of the base and rally. But this entire zone risk management is high. Then can we draw drop base rally? May not be very convincing. Okay, you know there is a 5 minutes, but you are not having 100% convincing with this zone. Here as well as here also. Why? Because here you may consider this also a base candle, so many base candles. So that's why what I did, I went to 3 minutes time frame. See here 3 minutes I didn't go because there is a 5-minute structure. Clarity is not 100% clear. That's why I went. If there is no 5-minute structure at all, you should not go to 3 minutes. 5-minute structure should be there. Some clarity is missing. At that time, we have to take 3 minutes structure help. Now you see, you have a drop, you have a base candle, rally candle, follow through candles. That's why I have drawn a zone like this. Like this. Drop, base, rally. Similarly, here also you see, you have a drop candle, you have 1, 2, 3 base candles and a rally candle. 3-minute structure. Or maybe, okay, that way I consider these two zones. But maybe if you are not convinced with this, you will ignore these trades. But because I convinced, I am showing you as per my analysis. If you are not convinced, you would have avoided these trades. But today they are stopped out. Whatever the analysis I did, it is stopped out. I have to action. Now, after seeing this, you may say, maybe the structures are not good. You have drawn the zone. That is the reason why they violated. You may say. See, I am convinced. I am convinced means previously such kind of structures are worked. In previously, they gave us good profits. Maybe today stopped out. That's why I have drawn. If I am a beginner, I would not have drawn these zones. Because I am having experience. Previously, such kind of price structures I have seen. They gave good profits previously. Today is an exceptional. By seeing one day, you should not conclude the reasons. Because some of you do this. Previously also some people, while learning the subject, they asked such kind of questions. I don't want such kind of doubt should enter into your mind. That's why I am giving clarification well in advance. Some of you may say, okay, structure is not good, that's why it is violated. No, structure is good here. 3 minutes clearly it is reflecting. But only problem is, today they failed, that's it. But see the second one, before it fails, it gave a movement. Sometimes it holded the prices within the stop buffer also. But it is not good enough to reach 1:3 RR. Maybe after getting the trade, maybe it might have given you 1:2 RR, it might have achieved. See here, it holded the prices, it pushed up. But supply might be strong, not good enough to hold. Maybe in Kalyani Jewelers, institutional order flow may not be much stronger than what we expected. But whatever it is, it did not reach. See, reaching up to here would have been 1:3 RR. Up to, you are seeing the hand symbol, right? That is 1:3 RR level. But price reached up to here only after getting the trade. This is the trade we got. After that, this is the only maximum area. Again, once again moved. This time also same area it reached in this candle also. That's why I am saying they are short of. Maybe half of the RR only achieved. But as we land 1:3 RR, if we did not get, it is a failed trade. Of course, it should stop out. If it does not stop out, it is like no success, no failure. Yesterday we have seen, right? So that's why I didn't consider the trade in the performance statistics either as a successful or failure. I just ignored that. Minimum 1:3 should be there, or it should be stopped out. If it hang in the middle, it is like no profit or no loss kind of trade. Okay. So this is the way Kalyani Jewellers has given 2 order flows as a stopped out trades. That means 2 stocks gave 4 stopped out trades today. And 3 stocks gave 3 successful trades. If anybody would have taken a trade in Indian Hotel or Kalyani Jewellers, maybe it's a bad luck. You might have lost some money, but hopefully next time you will get profit. But I'm sure Wipro, if you would have done analysis properly, you would have got a trade. CAMS, we got a good profit, perfect trade. Only thing you should learn from CAMS is a new target, dynamic target, you have to exit. Anyway, that gave more than 1:3 RR. And third one you should always remember, Balakrishna Industries, the dynamic zones. Many of you are aware of this concept. You already learned in lesson 21. Only bad luck is yesterday Wipro, in my analysis, that finding the dynamic zone is missed somehow. Today while analyzing, I came to know how I missed it yesterday. Otherwise, yesterday in our performance statistics, one more trade, successful trade would have been added. So these are the trades, and 2 trades we missed. What are those 2 trades? What are the reasons for missing those trades? I didn't remember exact stock name. Let me check. Maybe one could be Dabur. This is a 75-minute zone. Yes, Dabur. This is a 75-minute zone, drop, 2 base candles, drop and follow through candle. This is how our software identified this zone. See, this is the 15 minutes target reached today. Right? See, prices reached this 15. Failed ERC, again 1, 2, 3, 4, 5 base candles and with hidden body rally candle. That 15 minute zone today prices reached. And this is your zone. Lower time frame zone as an horizon to the higher time frame. What is the higher time frame? This 15 minute zone. Look into the 15 minute zone here. You have a rally, 2 base candles and a drop, and again rally base drop, LOTL zone is created, and from this zone it is tested previously, again rally base drop is created, and today also from this area again rally, see here rally base drop is created. Again a new zone would have been created here, dynamic zone, and once again it gave another trade and again came down. Lot of high liquidity, but who is the one holding all these prices? That you will see in 5 minutes time frame. Go to the 5 minutes time frame. In the 5 minutes time frame you have a drop candle, you have 2 base candles, and you have a very big drop candle. Dynamic view, it is like a drop candle, big drop candle. It looks like failed ERC, but dynamic viewpoint of it is a big drop candle. And this 5 minute zone is the origin for this 15 minute zone. From this area prices are coming and coming down. Here also near to, see I didn't draw week to week. If I would have drawn week to week, see prices entered and came down, prices entered and came down. Risk management point of view, type 2 proximal. Even then, today we got the trade and came down, definitely it would have given you a good profit in the gap area. Again moved up, gave one more trade. This time it reached the target, or here maybe close to the target. Here clearly reached the target. But why we didn't take trades? Reason is risk management. See how big the zone is. The zone is very, very big zone. Okay, can't we go to 3 minutes and you can find you. I went to the 3 minutes. Clarity is missing there. Structure is not really good in 3 minutes. So that's why 3 minutes I can't consider anything here. 5 minute structure only I have to consider, but risk management is not. If you want to manage our risk, maybe somewhere here you have to fine tune and take the trade. But are the prices reached that level? No. So that is the reason why you can't handle this trade. You can't take this trade. You may get risk beyond some 3% or 3.5%. Okay, high liquidity zones point of view, they worked. But including because we are not just checking the high liquidity zone performance just like that. We are checking high liquidity zone performance based on the risk management we are checking. We are applying risk management and then only we are checking the performance of our zones. That is important. Otherwise, why we have to do every day this much analysis? Simply I can show you the zone. Okay, it entered the zone and it came down and it gave the profit. That way I can close the topics. In 5 minutes I can explain every zone. Why every day we are looking into the fine tuning the zones, calculating the risks? Because you all should understand it's important, risk management. Only risk management only protect your capital, especially those days when your stocks are stopped out. You got it? So that's why Dabur we didn't get the trades. It's not convenient for taking the trades. Similarly, one more stock is also there. I forgot the name. But let us check one by one. Copal we didn't discuss, right? Yeah, Copal. Next one is Copal. Same case. Copal also. Copal is also a 75 minutes high liquidity supply zone. See, today it went and came down. First of all, I didn't draw 5 minutes zone here. Mainly because the risk management itself, the structure not very clear, so I left it. But here at the digital line, we have a fine-tuned zone. First of all, how our software identified drop, 2 base candles and drop. It is a 75 minute zone. Now let's fine-tune with 15 minutes time frame. Go to 15 minutes time frame. See here in the 15 minutes, you have a drop candle, you have a base candle, you have a drop and a follow-through candles. Sharply prices came. So that's why I have drawn this zone here. And also here, if you observe, here also you have a drop candle. You have 1, 2, 3, 4, 5, 6 base candles and a drop candle. This is not lower time frame zone. It is not that concept. The reason is, this is the trade at the digital line. See, exactly within the digital line. Only few candles and legging came outside the zone. Lower time frame zone concept, what is that? Completely the zone should create outside the zone. The leg out should be outside the high liquidity zone. But this is not that concept. This is a normal fine tuning the zone concept near the digital line. That's it. Okay, anyway, you have a drop, 5 base candles and drop, a fine tuned 15 minute zone. Here again rally base drop, another 15 minute zone. Now both you need to fine tune with 5 minutes time frame. First let me complete the upper one. Here you see I consider this as a leg in, a large candle. You have 1, 2, 3, 4 base candles. It is like a rally base drop. So this is the fine tuned 5 minute zone. This is the area we are planning our trade. But what about here? Here I can draw a zone like this. Leg out is not great, I agree, but imbalance started from here and see continuing like falling. Even though the leg out is not great, but imbalance started. Clearly we are seeing candle is continuingly coming out of the zone and continuing further falling and falling. That way I could have drawn the zone, 5 minute zone, but see the risk, how much big risk. Today prices entered into that zone. How sharply it came down. You would have got a very good profit. But what about the risk? You got a very big risk. You can't take a risk beyond 2%. Maybe you may get around 4% risk maybe. With this risk you won't get 1:3 RR, you won't get. It moved a very big move. But with this risk you can't get 1:3 RR. Sometimes you may say I do position size. I can manage the risk during intraday. Okay, I agree. You manage the risk. But what about minimum 1:3 RR? Such a big risk, getting 1:3 RR somewhere here. See, if I show you where 1:3 RR will reach, it will reach. Let me show you. Let me go to the short position. So this is the short position, keeping approximately some buffer, stop buffer. Whatever the stop buffer I am setting, mostly 90% accuracy will be there. Just my experience, I can guess. At least 90% level of the original value, this buffer will be there. Let us assume this is your stop loss and this is your entry. 1:3 RR. So this is our 1:3 RR. If it reaches here, then we say whatever you are planning, you are achieving that. But before that, where is the 15 minutes target? Because that is the area you have to book the profit, right? Somewhere here you have a 15 minutes target here. You have a drop 1, 2, 3, 4 base candles. Maybe if you draw a zone like this. Even if you drop to type 2 proximal. But do you get 1:3 RR up to here? No. What is the RR you get till this 15 minute zone? You get only 1:1.54 RR only you get. See, without looking into this RR, it is looking like a very good profit. Definitely you get more than 6% ROI you will get from here to here. More than 6% ROI you will get. But getting ROIs is not important. Suppose if the analysis goes wrong, managing the risk is also very important. See, if this is giving you 6% ROI for 5.4 RR, then definitely if it is stopped out, you would have got around 4% or 4.5% loss you would have got. But what is accepted risk? Only 2%. So that's why we didn't plan any trade on this zone. Some of these zones, trades looks like good profits, but we can't. Got it? That way, both Dabur and Kolpal we didn't plan. We didn't consider those trades. There is one more stock is stopped out. Actually, it is not stopped out. It is violated. Morning 9:15 candle itself. That is a Coforge. See, Coforge is a daily high liquidity supply zone. Drop, base, drop. How I fine tune this zone? Go to 75 minutes time frame. See, here you have a rally, base, drop. And within this rally, base, drop, go to 15 minutes time frame. See, again you have drop 1, 2, 3 base candles here, and again with a drop candle, drop, base, drop. Within this 15 minutes, again go to 5 minutes time frame. So I consider this as a large candle, base candle, and a drop candle. That way this is the fine tuned 5 minute zone. But today it is gone. See, market itself opened with gap up. See, market opened here. The opening itself is completely the zone is violated. Which zone? The daily high liquidity zone for Coforge. So once it is violated, it is no more valid. For HLQ zone, see, after that if you plan any trades here within this zone, that is as per your analysis based on supply demand zone, some other concepts. But once it is violated, no more HLQ zone trade is invalid. Maybe you can plan for a piercer zone strategies or anything, new order flows are there, and then the retracement you can take trades. That is a different story based on piercer zone strategies. But HLQ zone point of view, this is gone. Because it is a morning 1 minute candle itself, zone is violated. See, morning 1 minute candle itself, zone is open here. So you can't plan any trade in this zone as per HLQ zone strategy. Maybe if you are planning any piercer zone strategies point of view, if you have any fine tuned zones here, at the time you can do it. That's a different story. Piercer zone strategies are very powerful. You already learned in lesson 20. Maybe you may draw drop, base, drop here. Or directly you go to 5 minutes time frame. Or maybe if you are intraday scalper maybe 1 minute. You may plan some trades, but this is no more valid for HLQ zone. Please remember, HLQ's strategy is different. We have to follow the rules as it is. Okay, Coforge is gone. It's no more valid for any trade because this is gone in the morning 9:15 candle itself. And remaining stocks, I think no trades. Let's look into them quickly. BPCL is a 75 minutes high liquidity zone. I think previously we analyzed BPCL. This is a daily high liquidity supply zone. See, it is having an horizon. 15 minutes and 5 minutes horizon or something is there here. But from the horizon it picked up. So from lower time frame, 5 minutes horizon only we can plan. Let me go to 5 minutes time frame. Let me show you the horizon. Here we have a rally, 3 base candles and a drop candle. Okay, risk management point of view, you may fine tune up to this type 2 proximal or something, but just for checking this is the horizon or not for the confirmation. Not only it is the horizon, but also it is a high liquidity. Keep on testing multiple times. See here, rally base, drop is created again. Another LOTL zone is created. That means new orders are added. See, finally it picked up the orders from the horizon and sharply prices came down and the entire high liquidity zone leg out is also completed. This is daily leg out, picked up the orders from the horizon and created. That's why in this horizon area we can plan our trade, but today prices did not reach to that level. And next one is Sonacoms. This is also having a fine-tuned 5-minute zone. Let me directly go to 5 minutes time frame. No, it is not the horizon, it is within the zone only, the actual order flow. It is already a tested zone because high liquidity zone is there up to here. So it is a tested zone. So let's leave this stock. It's not valid for our trading point of view. And why? Another reason for not valid, because the daily candle also, you see, daily candle went above that. That is pre-market. Daily candle shows you the pre-market order flow, but not intraday candles. If you look into the daily candle, this order flow is above this 5 minutes order flow. So that way also you can invalidate this zone. Next one is Nifty Junior. That is nothing but Nifty Next 50. This is also having 5 minutes horizon. This is a 75 minute supply zone. Sorry. This is a 75 minute supply zone. Drop. This is the drop, base and drop candle. This is how our software identified. But from where it picked up the orders, that you will see in 15 minutes time frame. You have a 15 minutes horizon. That 15 minutes is having a fine-tuned 5 minute zone. See, this is the 15 minutes horizon. You have a rally, 2 base candles and a drop candle. So from this horizon, prices came down. Next, go to 5 minutes. Inside that 15 minutes horizon, you will be having a fine-tuned 5 minute zone. If 5 minutes fine-tuned 5 minute zone is not there, the 15 minutes horizon will easily violate. See here, you have an excellent rally, base, drop. And this horizon is a little above our high liquidity zone. Just little above. But there is no other option. You have to plan trade in that 5 minute zone only. See here. Just before the 5-minute zone, prices sharply came down. That means prices came to the 15-minute zone, but not exactly up to 5-minute zone horizon. But anyway, we'll be planning our trade in this 5 minutes horizon. Or maybe you can, if the risk is okay, you can keep some entry buffer and you can plan the trade. But today anyway, price did not reach that zone. Next one, remaining all we discussed, right? Balakrishna Industries, Kolpal, Dabur, Wipro. So we have completed everything. So this is about today's analysis. A lot of learning there, especially for the new members. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.